Now, this is a major development. Global stock markets have suffered big losses driven by fears over the state of the American economy and the situation in the Middle East. The Indian benchmark indices are similarly trading down after an opening slump, with the Sensex and Nifty shedding nearly 3% each. The story is also similar in a number of other key economies. Japan's stock exchange or stock market has suffered its biggest fall in over 35 years since 1987. Japan's Nikkei 2025 ends trading day down 12.4%, the worst single-day result since Black Monday in 1987. Let me go across to Hina now for more on this. Hina, what are the reasons or the anxieties or the apprehensions behind this monumental slide, with repercussions also, of course, being felt here in India as well?
Well, that's right. It is a sea of red indeed as far as stock markets across the world are concerned. Now, what is happening on Dalal Street is a reflection of what's happening around the world. I will cite three important reasons that which are behind this bloodbath that we are witnessing today. Both Sensex as well as Nifty are down close to 3%. The Indian investors in a single day are all set to lose over 15 lakh crore. That's what the analysts are estimating. That's how the trends are looking like at this point in time. The first reason is a fear of a possible recession in the economy in the United States of America. Why we are saying it? Because on Friday, the unemployment data that came out of about 4.3% was something that the analysts did not expect. The slowdown, was more than what the economists were expecting. So that is reason number one. Reason number two is the policy change that has happened as far as the Bank of Japan is concerned. The Japanese currency has appreciated against the dollar. That's the reason why Japanese markets have tanked almost 10%, and the result is also being witnessed on Sensex as well as Nifty in India. And the third and another very, very crucial factor that's leading to this bloodbath is the rise in geopolitical tensions in the Middle East. That's also behind the meltdown after what happened in the last few weeks, how Hamas's leader was killed, and there are now apprehensions that there could be potential attacks in Israel by Iran and some of its allies. Those are the concerns that are spooking the markets, because remember, Middle East is rich in oil, and if some sort of attacks, if escalation happens there, then that's going to impact the supply of oil. That is going to lead to more inflation around the world. And these are some of the worries that are spooking the investors at this point in time. And close to 3% cut is what we are seeing on the Indian stock markets.
Stay with us because we have a perspective from some market experts as well over the prevailing situation currently. Let's listen into that as well.
This is on expected lines. Friday what we saw on the US markets, and this morning in Asian markets, US futures were down. So four major reasons are behind this, and this is on expected lines, this gap down opening.
So what are the reasons, sir? Basically, because we know the unwinding of yen in Japan and some tensions in Middle East. So what are the major reasons apart from these two, which is affecting the global market, including India's markets?
See, the immediate trigger is the Bank of Japan raising rates on Wednesday. What happens is there is something called a carry trade, where people and investors borrow money in yen and they invest in currencies and in markets across the world. Now, yen has strengthened more than 10% in the last 15 days. And that is causing a lot of unwinding of this carry trade across the world. That is the first trigger. Wednesday, the Bank of Japan raised the rates, and that caused it. Second is the weak data points from the US. Their unemployment numbers are increasing. The job creation numbers are going down. Overall economy is getting softer. So the expectation is that the Fed might have overextended its restrictive policy, and now US might be set for a recession in the next 12 months. So that is the second trigger. So largely Japan rate hike and unwinding of carry trade, and US weaker economy. Along with that, the Israel-Iran geopolitical tension was in the background, but last time the way it got resolved Market is hoping that it will be resolved with some limited action and will not conflate into a bigger war. So that was under control, but Japan and US are the big causes.
The share market is vulnerable and directly impacted by the international factors. Right now, whatever the correction we can see in our share market Sensex is because of the financial situation developed at US market, and we have some problem in the Japan also. So because our market is already over priced, or say is running on a very good price, so any impact in the international side is going to have a consequential bigger impact on our share market. This is what we can see.
Well, let me go across to Hina now for more on this. Hina, let's discuss the possible implications of this now for India, because we were among the better performing markets in the months of June as well as July as far as FPI investors were concerned. Is there apprehension now that as far as India goes, there could be a possible blowback, even a reversal of the gains that were made over the previous 2 months as a result of what's happened today?
Well, you're absolutely right. That is one of the worries, as far as investors in the Indian market are concerned, because now the foreign institutional investors, the international investors, that were also pumping in money in the Indian stock markets are expected to pull out because of what's happening globally. But we also have to understand one thing, Sudha. As far as the Indian stock markets are concerned, over the last few years, how the Indian retail investors have started coming into the market, especially via mutual funds, etc., how the percentage has gone up, that makes our markets more stable as compared to other global markets. So we are not just dependent upon the foreign, participants. Our strength is also coming from the domestic investors. Over the last few years, what we have seen is that our fundamentals have become very, very strong. The domestic investors and their percentage overall as the contributor to the Indian stock markets has gone up. So whatever is the global worry at this point in time, like one of the analysts was also mentioning just now, of course, whatever is happening, globally will have a ripple impact on the Indian market.
Sure.
But whether this is going to continue for a long time or not is something that we'll have to wait and see. But as of now, because the fundamentals remain strong, Indian economy is on a strong path. We are likely to be, the largest growing economy, fastest growing economy in the world. So it seems that maybe in a day or two, things could stabilize once we get more clarity.
All right.